Lance is trolling YouTube this morning, in a good way. He's a friendly troller. Well, sometimes it depends. Some days he's very ornery. I don't know. Wakes up on the
Depends
wrong.
if he's had his Metamucil yet or not.
Yeah, he mixes it in the coffee. He's got that, or let's say the wife kicks him out of bed, whatever it is. So we really appreciate you being with us, whether you listen on the radio or on YouTube, and then obviously this podcast. So we try to hit you from all the different electronic channels, kick you right in the bits and bites. So actually, TK had a really good question about real estate peaking. Feels like it by observation. I think it's a good observation, TK. I keep track on a spreadsheet of Zillow and how long homes are staying on the market. And what I've noticed is there's a sense of normalcy going on. Like, I still think it's a seller's market. And I don't know how much prices might fall from here. But I think next year you might shift more to be more normal because of what I've noticed so far. And I know we're going into the season where it's not really popular to buy a home. But I've noticed how houses are staying on the market. Based on my calculations, it's about 25% longer than it was through the frenzy. So it's sort of crested and it's starting to move down. On an interesting note, I was looking yesterday at home equity loans and home improvements, and the number of home loans per 1,000 Texans was double the national average. So this is interesting, Danny, because we talk about this at our retirement right lane. Disability services, $26,000. When we talk about our right lane, we talk about long-term care and aging at home because most people do not want to. They really would prefer to age at home. And with technology today, it makes it easier for things to come to them and stay in communication. And we talk about what renovations might cost. Maybe you need to move your cabinets. You need to change up your bathroom, add a ramp, right? So it's interesting to see that in the Dallas-Fort Worth area, it's $26,313 for disability services, where in Austin, the biggie is interior remodeling at $55,000. So we were in that very popular home improvement, spring, March, most popular month, followed by April and May.
I know Lance was retrograding his house in anticipation of these things, the working from home, and so lots of people have been doing this as well. And I have the same type of kind of insight from what you're seeing. I'm seeing houses sitting on the market much longer. I'm seeing actually owners dropping prices. I don't think that we're in the environment that we once were where you could throw some crazy number out there and expect people just to go after it. We may be seeing this actually peak right now, or over the summer we actually did potentially. But, every time I've thought that over the last year, we've seen that frenzy heat back up. We'll see. Do we get into the end of the fourth quarter where we kind of get people moving around once again? And does that occur?
I think there's still going to be, to your point, Danny, I personally believe it's still going to be a seller's market because as more people work from home, more people want to move. The trend is still there, but I think some of the heat has, it's like an oven at Thanksgiving. Like this is how I think we add stock positions. Like when we add to positions, we're not waiting for the Thanksgiving oven that's been running for 8 hours to go cold. We're waiting for it so at least you could touch it. It gets warm. So I think the housing market gets a little bit cooler, and it gives buyers a little bit more leverage to maybe not have to, bid over the asking prices. And then what I've noticed is the prices that are coming in initially are about 5 to 10% lower than what sellers were trying to do before. So they're not trying to get one over because the market's hot. They're trying to adjust more accordingly to what the average is for that area. So that, to me, is an improvement. I don't think you may see house prices drop, but I think that maybe buyers might have a little bit more leverage because you're really pretty much pricing them out right now. And obviously, rents are going up quite a bit when we keep looking at inflation and look at the equivalent rent because mortgages aren't in there. We see that inflation really hit that area. And again, we've talked about it. It all comes from the fuel of hey, I need fuel in this car, and the fuel of wages and real wages are negative because of inflation overall. So a lot of dynamics going on right now, Danny, right? It's like, phew, man, you can't keep track of it all.
No, there are so many moving parts, Rich, and you're right. I talked to a hiring manager yesterday for a pretty large company in town, and he said they've gone as far as, they have the recruiters who look for people for them. They've started to work with temp agencies. He said he's gone back to them even this last week, said, are we appropriately, are our salaries appropriately matched to the job? Because he can't figure out why they can't get anybody to come to work. And this is across the board. I said, no, you're fine. There's not enough workers out there.
Well,
so where have they all gone?
No, and I think we talked about this on the show last year. What I talked about was something called transitional unemployment, where people are going to reassess what they want to do. And I just read an article a couple of days ago in the Wall Street Journal about that, where millennials and Gen Zs, but mostly millennials, were looking at, I don't know if I want to do this for the rest of my life. It's almost like a job self-discovery. It's not like they don't want to work, from what I read in the article. They're going back for certain training. They're going back to school, yet still working part-time. In other words, they don't want to go back to what they were doing because something clicked in their head during the pandemic that, hey, I'm spending my life working. I need to change. Also, some great studies that are still coming out that I read, that over 54% of employees polled said that if I had to go back to work in an office every day, I would look for another job. I demand that at least I have a hybrid schedule. And so I think it's a combination of things, Danny, and this transitional unemployment where I'm trying to build another career, do something different. I was working this job before the pandemic. Now I don't want to do it anymore. I think that is part of it. I think that is part of it. But what it's doing is it's creating, like Walmart just raised their wages, I think, to $15 an hour for like 560,000 employees, to like a little over $15 an hour, maybe to $16 an hour. It'll be soon where I'm going to be working at Walmart or Buc-ee's.
I think Buc-ee's will give you full benefits, Rich. That's not a bad gig there.
I posted a meme on Facebook yesterday, and it shows a police officer, and that it says, when you find out the assistant manager at Buc-ee's could make $60,000 a year, and then you see the police officer slowly morph into a beaver and then wearing the Buc-ee's hat.
Rich, I just don't know how you'd fare around all those people. I'm not sure if this would be the right gig for you.
I'd be in the fudge. I love it. Actually, I love working retail. I worked at Macy's Herald Square before I went into finance. I loved it for Christmas and all that. I mean, I don't know. There's an energy to that. And if I'm selling happiness like fudge, who's going to yell at me? I mean, I'm going to be like Willy Wonka, except I'm going to look like a beaver. I'm going to have a beaver hat. I mean,
Richard Wonka.
Yeah. Billy Beaver would be my name. Actually, I would change my name to Billy, and people would call me Billy Beaver. So that's going to be my next career. So you all know, Lance, now you know, I'll be working at Buc-ee's. Come see me. Come see me. I don't know, not the one in Giddings, though, because that's too small. Probably see Madisonville. That would probably be the one I'm at. Well, Waller. Maybe Waller. Okay. So, brilliant concept, Buc-ee's. If you all don't know about Buc-ee's, you got to look it up because it's sheer simplicity, but brilliance. So my girlfriend Amy, we went through, and she goes, I said, I can have a whole house decorated by Buc-ee's. I mean, they had like Thanksgiving stuff out, and it's actually good stuff. I mean, I said, my house is like Buc-ee's. It's decorated from Buc-ee's.
It's like Walmart with taste.
It is. I mean, the buyers, the marketers, the marketing department is amazing there. How they pick stuff that doesn't look cheap, but it's affordably priced. I don't know. It's just what a case study for college on Buc-ee's. So you have a concentrated position. Energy's done well. I'm in this camp, Danny, that I think, because of all the political wranglings and the demand for energy, I didn't see everybody lining up at a gas station for electricity in Louisiana. Terrible thing that's happened there. They're lining up to fill their gas vehicles. I just think that energy prices are going to stay higher. That is purely a guess, everybody. Just an anecdotal sort of gut kind of thing. And we'll see it. Now, obviously, energy stocks ebb and flow, but they have recovered quite a bit from the pandemic. I talked to clients yesterday that are over-concentrated in one particular company. And I said, listen, what is investment nirvana? While the skies are clear and the water looks like glass, are we going to sell some of this energy stock that you are over-concentrated in? I want you to feel the pain you felt during the pandemic. You got more than 20% of your liquid net worth in this company. Why not we create a strategy in the face of blue skies versus as in the middle of the storm and I need to take shelter? And I want to talk about some things if you have a concentrated position, or say you just let a position run. You have a position that's just taken over your portfolio because it's done so well. We'll want to talk about those steps when we get back here on The Real Investment Show. Stay tuned. We talked about beavers, and I'm going to be talking about squirrels in a minute. I guess I swear I know my head is. So we'll talk about squirreling away nuts when it comes to concentrated positions. But before we get to that, retirement right lane class. We're coming back and doing it live. 2 places. 1, Woodlands, right? September 18th, it's a Saturday morning. Sign up at realinvestmentadvice.com. It is really our 2-hour class on everything you need to know to make proper decisions, to be what I call ready to launch into retirement. You know, all we have to do is get you to that escape velocity to launch into retirement. This class will do it. We cover taxes, Social Security, Medicare, tax-efficient withdrawals out of your retirement accounts. And if you don't think taxes are going up for you, it's just going to be those who make $400,000 or more. That's a lie. Taxes are going up. Then we also have October 16th in Austin. This is what I love, this drive to Austin. Danny, I leave at like 4:30, 5 o'clock in the morning to get to Austin. And I have to go through the Buc-ee's in Giddings. It's the smaller Buc-ee's, but I still stop. I do like that little town of Giddings, so I do stop there. And there's nothing like Texas towns. Nothing like them. And so I like going through that, seeing the sunrise above the little guy's trailer behind the Giddings Buc-ee's, and I so envy him because I would love to be living in that little trailer working at the Giddings Buc-ee's. But no. So come visit me. All right. I have a concentrated position. My stock has done well. Wouldn't I want to make decisions now? And what I told the client yesterday, and he agreed, was we're going to sell some of this concentrated position at a really good price. And then this is what I want you to do with the money. Because you have all these goals in your financial plan that you're looking to meet. But I want you to take the money out of the managed account and I want you to put it into an online savings account. Any of the proceeds that we're doing, because I want you to stock up your nuts for the time when the market and this stock is not doing well and you might not hit your goals. I don't want to, well, what am I going to do with the money is always the question I get. And my point is, you're going to squirrel it away. This is the nirvana of harvest, right? I can put this money into an online savings account because I do need this money to hit my goal. In other words, so I had him picture the goal. Well, I'm going to need a car next year. That's in my plan. Right. We've already made enough in this one stock, net of taxes, to pay for the car. Why don't I take that money and isolate it out, and then I know I'm going to use it? Now, that's sort of a mental accounting where I help people don't look as money as fungible, but it helps people get the squirreling away and also selling in the face of strength, not trying to scramble and manage risk at a time of market turmoil. So we did that yesterday, and now we put away the car fund. Now he goes, well, I also want to take this trip, right? That's in my plan for 3 years. All right, let's do it. Let's take this cash out and also do enough there. So we reduced his concentration. We managed his risk. And we just marked off 2 goals on his financial plan. Score! What do you think?
I think it's a great idea, Rich. I think the problem with many financial plans is that we're looking at these high watermarks and, we don't ever take advantage of what got us there.
Right.
In the long term, right? And so the problem is that we may write this position up, but then we may also write it down. So we need to have that strategy to start to take advantage of, one, let's start checking those goals off. Here, what do we have earmarked for the near term future? I think that's going to be extremely important. And the other exercise I like to do is say, okay, well, look, we've had a fantastic run in this position. Many times, especially here in Texas, we see a lot of it's either energy stock. We see a lot more tech stock now as well. And it's a company that has done extremely well and that they're very comfortable and versed with. But at the end of the day, you need to be able to take it in and put it in perspective, kind of like what you were just mentioning. And I think there's another way to do that too is, okay, what if you do see another 10, 15% upside? Is that going to be life-changing? What if you don't? What if you see this thing cut in half? And let's start looking back at different times and instances where we have seen stocks get cut quite a bit. And now tell me, what does that do to your goals? What does that do to your overall plan? And I think that begins to put it in perspective, and it allows someone to start to think, okay, now let's start this strategy. What should that look like? Is it shaving off 10% every time it hits a new high, or is it doing it once a month? Is it doing more than that? Is it buying a put option to give you some type of insurance below it? I mean, there's a handful of ways that you can go about this to give yourself that protection and take advantage of the current upswing that we've seen.
But and to your point, you're not doing it though when the storm is upon you and I'm trying to board up the house during the rain. I'm doing it where the skies are beautiful and sunny, and I'm going to take advantage. To make that decision from a position of strength versus scrambling is so important. Now, that doesn't mean, because people goes, well, I'm selling. Like you said, I'm going to miss out on an opportunity. Well, I'm like, okay, this thing is a tree, and it's got all this great fruit. I'm not asking you to cut the tree down. What happens if I don't pick that fruit? It shrivels up and dies. I want you to trim some of it out, right? You're not selling the position completely. It's a win-win. If the stock goes up 10 or 15% more, I still own it. And I can look at this sunny sky scenario again. If the stock drops 15%, I look like a genius because I sold some and I socked away some of the money that I was going to use for a future goal. But the most important part here is I'm linking the sell to the accomplishment of the goal. Have people checking that stuff off and knowing they've got that money squirreled away, not beavered away. Sorry, Bucky. Is important. You can't do that with every goal, right? I have goals where it's the lifetime income and I have to create it. Not that goal. But I do have specific wants and needs that money will fill, and I can check it off. And if I'm ahead of my, oh gosh, I need the car next year, but I'm way ahead of my goal on the portfolio because I needed to earn 3% on my portfolio. And a lot of our portfolios this year are doing really well, right? So we're exceeding benchmarks. Some of our stock returns are close to 20%. Past returns are no guarantee of future performance. You are selling, you are trimming, and hitting your goals at a time when the skies are blue in preparation for when they're not. It's such a level way to think. And to your point, concentrated position, you can earn income using covered calls. You can buy puts, like you said, Danny. I could come up with a strategy to say when the stock hits this price, I will trim this. What's cool about the people I've been talking to is they're not making the decision from taxes first. They're not, like Lance always says, I'll pay taxes any day on a profit. as opposed to riding this thing to a loss. That's how I look at it. I made money on this thing. I understand taxes, unfortunately, that we can't avoid that. But it's sort of like cutting off your nose to spite your face. It doesn't make sense that I'm gonna wait till this thing is a loss, darn it, so I don't have to pay taxes or as much. You know, if it's long-term capital gains and we still have long-term capital gain rates that are more favorable than income rates, ordinary income rates, even better. So you may have a concentrated position in just you did well. You have one stock that's been doing really well, and this is not there's an old adage, right? You cut your losers quick and you let your winners run. Well, I am letting my winner run. But I know if this winner keeps sprinting, he or she is going to get exhausted. This runner is not going to run at the same level it's been running. So all I'm doing is giving it some air, giving that runner a break by taking some of that position off the table. But I think when you link it to goals, which means you have a plan in place, I think it's more satisfying. I think it gets people to say, yep, I need $40,000 for a car, and I know I'm going to need it next year. And look, Danny, like you said, what if this stock is off 15, 20% next year, and it drives most of your portfolio? No, let's now put that money away for a car. And I wouldn't advise you to buy a car this year anyway, based on what's going on in semiconductors. Look at Ford, GM, what they're talking about. Next year, toward the end of next year, you're going to need a car. You got the money already set aside in an online savings account that's earning 0.5% FDIC insured, because we don't want this money managed anymore. We hit the goal.
And Rich, that's a great point. But you know what you're asking people to do? You're asking someone to actually go out and do a financial plan.
That's what I'm
budget. Those 4-letter words. Come on, man. But it is so important. You know, you mentioned something just a bit ago, you know, needs, wants, wishes. And when you can put those on paper and start to check those off, you feel a heck of a lot better about your plan and your overall situation. But it's also going to give you the leverage to understand how to use these funds and when to do certain things. You know, everything you just described, you know, trying to take these profits while things are going really well. I mean, it should be intuitive or inherent that we know we should be selling high and buying low, or having that ability to do so. So maybe not just checking it off the big bucket list of, hey, we were able to meet this goal, but also on the flip side of it, we're also able to raise some capital to go buy things. So we're not riding something all the way up and then riding it down.
Don't be silly, Danny. Stocks never go down.
Yeah. I know.
We'll be right back. We did get a question about budgeting software, Danny. And you know, I always talk about, and we're going to talk about Medicare Advantage and Medigap in a minute. First of all, I've been doing zero-based budgeting since I'm like 12, where I account for every dollar that comes in and goes out. I love the Dome home budget books. These have been around since the 20s, and you go on Amazon. They're really inexpensive. Go to Office Depot, pick it up. If you want to do it electronically, see, I think there's something about pen and paper that's much more intimate, that it's more effective. But if you do want it, I go and I really like, there's a weekly budget worksheet template on Google. It's Docs at Google, docs.google.com/spreadsheets. And it's a weekly budget worksheet template. It's a Google spreadsheet. And it really will break down income, expenses, looks from week to week. You can keep track of it. You know, just take that, download the worksheet. It's really good. I had a client that's been using that, and before he retired, he's been micro budgeting, which means he's accounting for every dollar, because it's like his spreadsheet to put the rocket ship into place of retirement so that he's ready to launch, and it's an escape velocity, and he's using this worksheet to do it. So you can input there. It's a pretty good worksheet. So I've been working with a client, Danny, who is really going between Medicare Advantage and Medigap, which are two different ways to supplement your basic Medicare, although Medicare Advantage, Joe Namath, he's promoting it. Jimmy J.J. Walker, Dynamite, Medicare Advantage. They get a lot of airplay because they're very profitable for insurance companies. They cover everything, right? You can get your drugs covered. You might get a nice Apple Watch. You get, you might get a gym membership, and no premiums. No premiums, right? Very attractive. Medigap is very different, right? Medigap, you pay the monthly premium. You're not getting any gym membership. You're not getting any dental coverage. You're not getting vision coverage. It's not all encompassing. But it gives you freedom. It gives you freedom to make choices that you would not possibly make, especially in the face of a life-threatening illness. So this is how the client summed it up, because he was going more toward Medicare Advantage, but then a family member of his who he trusts uses an independent agent, and he went to that agent since he trusts his family member so much, and they pretty much matched up what I told him, even though I pretty much thought I lost him to Medicare Advantage. By the way, we're not selling Medicare products, right? We're insurance products. I just want the clients. We want clients, and we talk about Medicare Advantage, the right choices for Medicare at our retirement right lane. So here's what he writes. With my monthly costs are a little higher with the supplement, my maximum annual cost would be lower. Here's where he got it. If a major medical expense comes up, and that's what I'm guarding against. With my medical history, I want the universal access, right? Because I can maybe go to another state and my Medicare Advantage might cover the doctor, but not the hospital. Who knows? Maybe we have an emergency somewhere else. This happened to a client of mine. With my medical history, I wanted the universal access and stability of benefits. Yes, on the surface, Medicare Advantage is cheaper. You may not pay anything at all. But maybe and if you're very healthy and your cash flow warrants it, then Medicare Advantage, if you look at the Kaiser Foundation on healthcare, these plans are exploding in popularity because, Danny, health expenses they're quite a bit in retirement. And if I don't have to pay a premium and I have an annual, if everything's fine and I don't have some major illness or some strange thing that happens where Medicare Advantage might turn me down, I'm going to take the risk. But Medigap, where I have to buy my prescription drugs, I have to buy a D plan, I have to buy a Medigap plan, that will cover you more effectively in the long term, especially if you have a debilitating illness and you want the best care possible. What do you think?
Well, Rich, I think we're seeing that explosion in popularity amongst people because of the current healthcare conditions as far as what costs are. We're also seeing people retire a lot earlier. And so, we're seeing, I'm getting a lot of questions on MediShare.
Yes.
We're seeing actual retiree healthcare benefits, which there are a handful of companies that are still offering it. Mm-hmm. And a lot of times they're offering the Medicare Advantage plan versus the traditional, Medigap policy, which we've traditionally seen. And so it pays to go and kind of look underneath the hood, understand exactly what you have, how it works. Now we are seeing some changes in the Medicare Advantage space as well, where it used to be all HMO, all closed network. We are seeing PPOs now, so mm-hmm. there have been some gains that I think have been done there. I think it's really important to make sure that you know exactly what you have, and you also understand the consequences should you catch something or have a pre-existing condition. You may not be able to switch from that Medicare Advantage plan to the original Medicare Medigap policy like you think.
Yeah, so let's think about this for a second. God forbid.
That could be a problem.
Right. I've been working since now I'm 70. I'm in good health. I want to retire. I have a employer plan that I now need to. I have an enrollment period, special enrollment period, where I need to get my Medicare in order. Maybe I have A, because I did that at 65, but now I sign up for B, and I have to find a Medigap policy. and I have to find a prescription drug policy. And I decide, even though I have an enrollment period and a grace period where I can go on a Medigap policy with no evidence of insurability, and I decide that I'm going to go with Medicare Advantage because it's cheaper and I'm in good health. Now I'm 72 years old, and I'm hit with a cancer. And the doctor says, hey, well, this is the treatment you need. But Medicare Advantage says, we don't pay for that treatment. We pay for this treatment. And you go, okay, well, that looks effective, but this one is even more effective. I'm sorry. Then you try, like you said, Danny, you try to get a Medigap policy and say, oh, gosh, I got to go back to Medigap because I think they're going to cover it. It's more comprehensive. Well, now I need evidence of insurability. And I can't get back onto Medigap. I can't get onto a supplemental policy. Sure, I can go back to original A and B, but that's not going to help me with all the additional costs and this particular drug or treatment that I need, that Medicare Advantage says, no, we're not doing that. The choice is taken away from you. Yes, it's more expensive up front. But if I want to protect myself to that degree. Now, Danny, what we talk about in the right lane class is, hey, you need coverage, and sometimes you just can't afford it. You can't afford the Medigap policy, right? You know, I'm going to pay $148, which will probably be closer to $149 next year for Part B. Then I have to pay for Part D. That's probably $50. Then I'm going to buy my Medicare Advantage, and that's like $250. So I can't afford that, Rich. And we've done the plan that shows that. So, but we are playing healthcare Russian roulette here to some degree when it comes to which plan I get. So we have very set rules, right? Your plan, you can't fit it. You can't fit it into the cash flow. It doesn't work. You're very healthy. You've been healthy habits 10, 15 years before retirement, right? You took the living to 100. Your diet is good. And so you're willing to take that calculated risk. And every year, what am I going to do, Danny, around open enrollment, which is going to happen in October, right? I'm going to reinvest. I'm going to shop around. Like I have a client that shops around every year. Like he looks at his Medicare Advantage plan. He looks at his prescription plan. He looks really careful at his Medicare Advantage. Is it giving me everything I want versus what's out there? He spends hours every year reviewing his coverage. And heck, even if you take a Medigap policy, you want to shop your prescription drug plan every year. Most seniors don't do it. But it can save you money to do it because plans change. So there is a little bit of work when you're on Medicare Advantage. And if you're healthy, you might consider, heck, I go work out. You know, I have one client that's on Medicare Advantage. He works out, and he's in his 80s. He works out 4 days a week. And I'm not just talking about, walking around the park. He's running, he's doing yoga, he's doing all these things. He's rarely, if ever, at the doctor. Okay, I understand maybe why Medicare Advantage works for him. But that's, to me, an exception, don't you think?
Yeah, I think you have to really know yourself, know your current situation. If it's a cash flow issue or if it's just, hey, I've been in really good health, I'm going to continue to bet on myself, and that's okay. Mm-hmm. But just understand the repercussions should, God forbid, something happen. Also, make sure you shop. It's extremely important to shop these things. There's a lot of money left on the table every single year by not doing so.
And we're going to talk about this on our right lane. Sign up September 18th. Go to our new improved website. Sign up for Lance's daily market commentary before you have your sip of coffee. Lance is going to tell you what's going on from a macro level and a market level. Hey, we'll see you next week. Hope you have a really restful, long weekend. And Lance will see you next week. And so will we. Have a good one.
Money, 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 must be funny in a rich man's world. Money, 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 always sunny in a rich man's world.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
It's a rich man's world. It's a rich man's world. All the things I could do if I had a little money. It's a rich man's world. It's a rich man's world.